Welcome back to the program. You're still watching NetBank Business Watch. Thank you for staying with us. If you have just tuned in, you have tuned in at the very, very important time. We want to look at the vast landscape of financial choices, the difference between a wise decision and a costly misstep, which can often lie in the fine print, whether it's loans, overdrafts, or credit cards. Each financial tool has its moment to shine, but also its pitfalls if misunderstood. Today, we cut through the jargon and bring the clarity to the numbers. Charles Mkonda, Head of Sales Support, a man who doesn't just sell financial solutions but ensures clients make informed strategic moves with their money. From the necessity of fixed repayment schedules to the allure of credit cards rewards, we unpack the best borrowing strategies for different life situations. So the question is, are you making the right money moves? Let's find out now with Charles. Charles, good afternoon to you. Welcome to the program. It's funny, this money conversation, because borrowing has often been, perceived as a bad decision, but it has helped people with a lot of, improvements in their life, so to speak. Speak to me about, how one can approach the decision of whether to take out a loan, an overdraft, or a credit card, and why it's important.
Thank you so much, Sfiso. Good afternoon to the viewers. First of all, it's important to note that as a potential client to the bank, or maybe an existing client, there are situations whereby you cannot, given your current income, be able to take on special projects, right, or take care of emergencies. So these are situations that then call for you to reach out for a helping hand, whereby the bank then avails these facilities to you as a client. So taking out a loan, as you are saying, is not such a bad thing if it's taken out at the right time, for the right purposes. As I was saying, there are instances whereby you need to take care of large expenses, like you need to buy a car, you need to buy a vehicle, you need to fund a business, you need to pay for school fees, or even you've just got an emergency that has come up, like a medical emergency. So there are some instances that require for you to reach out and go beyond your current means.
Yeah, and I can suppose even, just on a daily basis, you may find something that you may need to buy at that particular time. And then you look at your balance and you're like, my money doesn't allow me to afford this right now. The overdraft avails itself there, doesn't it?
Exactly. So the three types of borrowings mainly would be your loans, your overdrafts, and your credit cards. So your overdraft comes in whereby, in a situation whereby you're in a quick fix and you really need to be bailed out at that point in time. So what the bank will do is they will give you a limit that you can use. So that limit can be used at any point in time for any of your expenses, like you are saying, an expense that comes up. But it's important that as you've taken up the overdraft, make sure that your repayments, say maybe your income at the end of the month, is able to adjust that overdraft so it becomes available for you over a long term.
Yeah. So it's important to make those calculations if you're going to go with the overdraft choice, to assess whether when you do receive that salary or that money that you expect to come in, it is enough to cover for that and then carry you through for your other expenses. It's very important.
Precisely.
Let's get into the loan in particular. They are often looked at as, a safe choice because of the low interest rates and, of course, the restructured payments, as you call them. But in a world where financial stability, obviously right now, it isn't always guaranteed with all the social issues and economic issues that we are currently facing, what should a borrower consider before committing to a loan?
Thank you, Mr. Nxumalo. So before committing to a loan, you must consider, first of all, the amount that you require. Loans will give you a lump sum that you will have to pay over a fixed term. So the good thing about it is you are able to adjust for the repayments. So it's important to, first of all, consider the repayment period that you'd want for that loan and the exact amount that you need. So, for instance, if you need a 65,000 Emalangeni loan, it's not advisable for you to then go for 80,000 Emalangeni, yet you need 65,000, because in the future that's going to catch up with you when you need to be bailed out somehow. So if you need another loan, then you'll find that your affordability by that time has been affected by going overboard in terms of the loan that you got previously.
Credit cards, often the most misunderstood methods of borrowing. There's a lot of promises that come with the rewards, the convenience, interest rate, free periods. Talk to me about, how one can harness this particular benefit of credit cards without falling into a perpetual financial trouble.
Thank you. So with credit cards, most viewers may not be aware that if you pay off your debt within a 30-day period, then there is no interest that is charged on your credit card. So if you're able to use your credit card and then pay it out within that 30-day period, then you'll be able to sort of get free debt from the bank. So it's a leeway that viewers can use at any point in time. But the most important thing about credit cards is that they open up doors for you to be able to transact almost all over the world. So you may find out that in instances whereby your debit card is unable to process a transaction, with credit cards you are more free to process those transactions. Like you're saying, there are also benefits that come with credit cards. So those benefits clients are also open to use those benefits. Rewards. But I would suggest that as a client, be responsible as you're using this product. Your credit card must also be used, but try to pay it off as quickly as possible, as compared to the others.
Interest rates and fees, an interesting topic, because they can make or break a borrowing decision, right? I think that's a general consensus. But what are the key factors there that, let's say, customers should compare when choosing between these options, the interest rates and the fees?
Thank you. That's actually a key consideration that a client must make before taking out any loan. You must be able to compare your interest rates, because interest rate will affect you for the duration of the repayment. So even a difference of, say, 1% in interest rates, if you're looking at it over a long period, turns out to be thousands of Emalangeni. So it's important for you, before you take out a loan, consider what the interest rates are. Consider also the fees that you're going to pay pertaining to that loan. So do read the fine print and do find out what those fees are, because it may at some point in time look like it's cheaper for you to take out that loan, considering only the interest rate, yet when you look at the associated fees, it becomes much more expensive for you.
Yeah. And I'm aware that Nedbank has a loan calculator tool that it offers even online. I believe you go on the Nedbank website. You do have that loan calculator that can surely help you. Talk to me about the importance of utilizing such tools.
Thank you so much. So you're absolutely right. At Nedbank, we have the tool whereby you can go and calculate your repayments. So it does give you an estimate of how much you're going to be paying in terms of repayments. And you can even adjust the periods to a comfortable period that you'd want to use. So such tools are so important when it comes to your budgeting now, because as a client, you must be able to budget for all your expenses before you even go through them in the month. So it's better for you to budget for those expenses before even your income comes in at the end of the month, because you may find out that you are losing a lot of funds as you are going through the expenses of the month, yet you could be cutting out unnecessary expenses.
Yeah, we often speak about budgeting as, you know, a measure that one takes when they have money, whether you budget for your groceries, whether you budget for your children's school uniform, whatever expenses that you have, really. But it often eludes people that when they go to borrow money, they can also budget around how they are able to repay that money. Because like you are saying, there's a big element of responsibility. I think you've mentioned responsibility across all these sections, so that becomes very big, and budgeting is a big responsibility. Talk to me about, you know, budgeting as a form of a repayment solution.
Thank you. You're absolutely right. Budgeting is such a big element of your income. Monthly, as you're going through your expenses, you will note that clients tend to maybe overspend when it comes to entertainment and events and all the like. So it's important for you, as you go seek this loan from your financial institution, ensure that it falls within the budgetary means that you have. So for instance, you may be taking out a loan for a car repayment. So as you are making those repayments, you will notice on a monthly basis that your affordability is affected somehow. So it's important for you to stay comfortable and ensure that you're still able to do the things that you enjoy within the income that you have on a monthly basis. And I must mention that as a trusted financial institution, we are able to calculate for you your budget and ensure that you're still living within your means.
Yeah, I'm aware that you are available on X, on Facebook, and on LinkedIn at Nedbank Eswatini. For our viewers at home who may have more, you know, questions to ask Charles or anyone at their nearest branches, Nedbank is at your nearest convenience there. And you can also have their help desk number, 3278 1999, 3278 1999, available on X, Facebook, and LinkedIn. Nedbank Eswatini. This has been Charles Mkonda. We'll go for an ad break. We'll be back shortly.